We're doing something a little different this today, boys. So you guys are in for a treat. So
Uh-oh.
this go ahead, Pete. Go ahead and let everybody in.
Is this because restreams still?
Yeah, I think so. We'll see. Here we go.
Are you telling me that you have a way to defer the tax situation there? Is that what you're telling me?
Yes, absolutely. Yes. And so the first one I was referring to is a 1031 exchange, which only applies to investment real estate. The second one I'm referring to is called a deferred sales trust.
A real eye opener to see that there are ways that people can use the regulatory framework, if properly structured, to invest 1031 exchange dollars in things that you would not think were like kind to what they exited from. So it was very impressive. I got to say, you are the first one I've seen pull this off, and I'm pretty hesitant to believe in a lot of these kinds of things. So it's a major feat for me to say, wow, this actually really worked, and it was really cool.
1031 is a way to shelter your income when you sell the thing. The DST is a way to avoid the 1031 and not have to suffer the time penalty.
Our career and during different tax periods, we've seen, these tax avoidance, tax minimization, offshore, all these different strategies undertaken to minimize or avoid taxes. And then I can tell you that, some of them are just not worth the trouble. And so I was skeptical. Admittedly, I was skeptical. I thought, oh yeah, here we go, another one of these, right? And then they say, no, it really is different, right? So look more closely. We looked more closely. We had, honestly, 2 years of conversations. 2 years. Now we were being due diligence at the same time that we were doing due diligence, but 2 years is a long time to be, sort of flirting with the idea of and getting to know the people and getting to really understand the transaction. Yeah, long story short, we got comfortable, although we are not tax attorneys, lawyers, or estate planning attorneys, that at least, from an investment perspective, that, it made sense to sell a highly appreciated asset, get liquid, hold that in this type of a deferred or installment sale type of instrument, and then just be in a position then to do the most important thing. I'm probably stealing your next question, which is time. They say, well, you can't make more time. You can. The Deferred Sales Trust, in a way, allows you to lengthen the investment time horizon for those assets after getting liquid, but before having to feel the tax impact. And from an investment manager's perspective, time horizon is the most important element in investing.
Everybody, hello, and welcome to another Deferred Sales Trust Crypto Mastermind. Hey, I'm Brett Swarts, and I'm excited to have you here for the first time or as a repeat person. If you could put in the chat where you're calling from, where you're at, so we can connect with you here in a better way and serve you in a better way. Also, maybe what clients that you're serving, or maybe you're the investor yourself and you're looking at this for the first time or wanting to learn more about it. I'm joined by my business partners and my friends and extraordinaires, Jake Miller, financial advisor, CPA whisperer, and Mr. Pierce York, luxury agent, rising star with Capital Gains Tax Solutions as one of my business partners. So Jake and Pierce, how are we doing?
Doing well.
Excellent.
It's a wonderful week, Brett. Lots of great conversations, lots of clients that we're making a huge difference for. Some of them having the largest transactions of their life, and we're swooping in. I don't want to sound too cliche, but we're coming in kind of like the superhero to save the day, helping them reinvest the bulk majority of their new financial kingdom, so to speak, and instead of carving off pieces and chunks and giving it away to all the various taxing entities. It's a wonderful thing.
And Pierce, what do you think, man? How's that luxury real estate in Newport Beach and where you're at, and people that are trying to get out of crypto? What's your take on the market right now?
Yeah, market's still really hot, low supply, so seller's market for sure. And all those crypto millionaires, although it took a little dip. And so now we're kind of waiting for it to climb back up again before people start liquidating all those, at least the smart ones are.
Excellent. So you guys are in for a treat today. We're going to do a little shift, and I'm going to be giving this presentation here. And this is my, if you get to the plate, you got to take those practice swings. Okay, so I have an opportunity to be on stage in about T-minus like 14 days or so at the Best Ever Conference in Colorado. So if you're watching this, don't tell anybody. I'm not supposed to give this presentation to anybody, but you guys are here today and you guys showed up. So you're about to hear for the first time a brand new presentation. Obviously some overlap with the Deferred Sales Trust, but I'm going to share my screen. But here's the thing, guys. You guys got to keep track of this because I only have 20 minutes on stage, including that 3-minute video that you just saw there. So what I'm going to do is I'm going to share my screen, and I want you to click Ready, Set, Go. You guys, I want you to take notes on this, and any questions that you have, you can put in the chat along the way. But so ready. Pink, you got a timer out? I'm also going to put it on my phone here. It's ready, set, go. So this is how to unlock the power of the Deferred Sales Trust to raise capital from crypto millionaires. And I'm excited to be able to present this. This is a 16-year journey. And for those, I'm going to be thanking the Mr. Joe Fairless. I want to thank Ben. I want to thank Frank Rozier for the opportunity to be here. I actually had an opportunity to cold call Frank and Joe, and guess where that call went? Nowhere. About 4 years ago. But this being on stage here is kind of like a dream come true because I so respected Frank and Joe and what they've been able to do in the commercial real estate world, be able to serve people with the best ever content for many, many years. And so I said, if I could just get Joe's and Frank's attention on this and be able to share with them what I'm about to share with everybody today, I feel like we can change the world of investing in commercial real estate and how we raise capital. And so I want to thank you guys. And so we literally have about 17 minutes left. And so I'm going to jam through. It's going to feel like a fire hose, but stay with me because I promise you this is going to be really, really exciting and fun. So for those who don't know me, my name is Brett Swarts. I'm founder of Capital Gains Tax Solutions. And on side of your WOVA app, if you can click on that, we did a little survey. I don't want you to pull out your phone right now. If we've already done it, all good. But I want you to put in what the biggest frustration you have with the 1031 exchanges. And there's a survey of a couple of different options there. But that'll give me some good feedback as I'm following up with everybody. As a legal disclaimer, I am not a CPA. I'm not a tax attorney, although I work with some of the smartest CPAs and tax professionals I believe in the world. They're brilliant, and I was fortunate enough to be able to study underneath them for many, many years, and I'll tell you about that story. But this presentation is simply for an overview of how the Deferred Sales Trust works. We strongly recommend that you bring in your independent legal and tax professionals to make sure that it's a good fit for you. So let me keep going on the next thing here. So May 6, 1965, a guy named Roger Bannister did something that no one thought was possible. In fact, he broke the 4-minute mile. And so doctors and people and athletes thought that the heart would explode, that everybody, that if you were trying to run under 4 minutes, that it was physically impossible. And then he did it, and he astonished everybody on this. And what's really unique about this next part is a guy named John Landy did it just 46 days later. And so the record only lasted 46 days after hundreds of years of people believing that it wasn't possible to do. And it broke through a barrier of false belief that what is actually possible is now possible. And many, many others have been able to go on and do that. And so similarly, maybe not as record-breaking in the history books in the sports world, something happened for me. And that happened on August 7th, 2021. And it was the first cryptocurrency deferred sales trust sale. And in fact, this presentation is basically centered around how I helped Peter to sell a $5 million worth of Bitcoin and Ethereum and defer about $1.8 million in tax. And we did that in less than 1 hour and one single day without using a 1031 exchange, without having to have a title company or escrow agent or wait on inspections. And we did this, and this was really, really amazing. In fact, this is a screenshot of it actually going over to the Kraken account. Kraken, for those who don't know, is like a Coinbase. And it was a Saturday, and I'm driving over into Walnut Creek. Anyone ever been to the Bay Area in California? Well, I'm driving. It's a Saturday. I'm actually I was taking a class for an insurance license, which is kind of crazy because I'm giving all these referrals out, and they're like, "Hey, get your insurance license. You can get paid." I'm like, "Oh, that sounds pretty good." So I'm driving, right? And you can picture this. It's a Saturday morning. I'm usually with my family, relaxing, not working. And he calls me at 7 a.m. and he's the most kindest gentleman one of the guys I've met. He goes, "Hey Brett, I know it's really early, but I want to let you know that Ethereum just crossed over 3,000 last night, and I don't know if you're by your computer, but I'm ready to exit 5 million. I'm ready to go. This is what we've been waiting for." And you see, their story was one of buying Ethereum at $100,000 and having it go all the way to 13 million. But during this journey, they also had these wild swings, 6 million down to 1 million, up to 9 million, down to 3 million. And they went through this turmoil of how do we exit well without getting hammered by the tax? And they're working 60, 70-hour weeks, and they have 2 kids, and they want to travel, and they want to do all these things, but they don't know how to get out without getting hammered by capital gains tax. And he's been in the tech industry for a long time. So his take is, hey, Ethereum has a big future. His wife is an attorney, and she's like, well, we have $6 million. Let's get out. And this was 2017. And he goes, well, it has a future. The compromise was, well, let's find a capital gains tax solution for this, and then I'll get out. I'll get out a portion of it. By the time they tried to find something in 2017, guess what happened? Everything crashed. And they went to a very low number, like I think around like $1 million or 500,000. And they're like, oh gosh, our dream of retiring has been lost. Fast forward, again, August 7th, 2021, it comes to a fruition where they were at 13 million. And so they exited out, and I helped them defer $2.45 million of tax, right? Which is really, really amazing. And so these are some of the facts I want to let you guys know for the opportunity for all of us. The crypto market is estimated to be about $3 trillion worldwide. In the last 12 years alone, Bitcoin has gained over 190,000%. That's a huge capital gain, right? $32 trillion as well is the other part of this wealth transfer that's happening. And that's with baby boomers. And that's, according to the American Bankers Association, it's the largest wealth transfer in the history of the planet. So you couple that with these baby boomers turning 65, about 10,000 every day, and there's 77 million baby boomers in the US alone. Then you look at these 1031 exchanges that are not eligible for primary homes, private stock, businesses. You go, oh my gosh, there's never been more wealth at all-time highs, and they're looking for solutions to get out with tax. They're also looking for ways to invest in commercial real estate and get that depreciation, which is so powerful, and why we love investment real estate. So these are the Winklevoss twins. These guys are known as Bitcoin billionaires. And the question is, how can we raise capital and help them out and serve them really well? And by the way, a lot of your clients or a lot of your investors, they're reluctant to sell because of the capital gains tax. So let's define the problem. Your clients are facing 30 to 50% in capital gains tax and depreciation recapture, depending on the asset. And so they feel really trapped and they're frustrated. And every single day, high net worth cryptocurrency, primary home, business, stock, public or private, and investment real estate owners, they pay hundreds of thousands to millions of dollars of capital gains tax when they don't have to. And most of them are showing up post-close. So they're selling their dental practice, they're selling their cryptocurrency, they're selling their primary home. It's not 1031 eligible, and they're showing up with this cash, and they're saying, hey, how can you help me invest this and make this thing work? And so that's where we're going to show you. So it's a few things to consider. It's okay to dream of helping your investors defer millions in tax and becoming the #1 capital raiser in commercial real estate. It's also more important than ever to unlock new deals, new value, and be in the business of solving your investors' problems. So I want you to be like Leonardo DiCaprio, who's just closing deals, right? Helping clients, solving problems, and people in the back going, wow, how did he just close a $50 million cryptocurrency client into his deal? Well, he solved their problems. And I'm proposing to you that the Deferred Sales Trust is the solution for this. And we're going to talk about that here in a minute. But who is this for? I want to make it very clear. If you or your investors or clients, it should be have, I'm going to make sure Pink, you update that. It says has, but have a $1 million net proceeds and a $1 million gain per transaction. That could be crypto, NFTs. It could be a business, investment real estate. It could be a failing 1031 exchange, even past the 45 days, no problem. It could be GP or LP interest. It could be primary home, private stock, public stock, carried interest, captive insurance. artwork. In fact, my good business partner and I are working on a $100 million art sale with an NFT combination to exit, where he was facing in California 40% tax. And could you picture this? You start in your parents' basement 16 years ago, and you have a dream of taking your artwork and helping to inspire people for change and a lot of really good things. And you start to make artwork that is priced in the $1 million range, and then it goes all the way to 5 million, 50, 100, maybe even $1 billion worth of art. Okay, thousands of different pieces, and you're looking to exit a big $100 million of it, and you're looking at 40% tax and huge estate tax. Well, guess what? We have a solution for this, all of this. Okay, so by the way, what is a deferred sales trust, and why do we need one? First of all, it's just an installment sale. It goes back to IRC 453, which is in the 1920s, came along as known as kind of like seller carryback. The deferred sales trust itself, though, has been around for 25 years, and it's just a way for you to exit and not have to suffer the tax consequence right away. In fact, you can delay the tax as you receive payments. It's kind of like an IRA. It's kind of like a 401k. And why do you need one? Well, I want you to think about Blockbuster versus Netflix. Do you guys remember driving on a Friday night wanting to get that movie, but it's checked out? Or getting that movie, you have to return it within 3 days? Or getting that movie, returning it, but you didn't rewind it and you have that fee? Well, that's kind of like the 1031 exchange. It's very restrictive. It's 45 days to identify, 180 days to close. And it becomes very frustrating for those who want to exit out of crypto or businesses or primary homes and be able to go into unlike kind assets such as investment real estate or real estate funds or stocks, bonds, and mutual funds or hard money lending into the deferred sales trust. It's like Netflix in that you don't have to deal with any of the 45-day 180, any of the like kind challenges, any of the equal or greater value. In fact, you can defer, we like to say somewhere around 25 to 50% in capital gains tax. You can also defer income tax for a period of time. It can save a 1031. It's a backup plan. You also can get a new depreciation schedule if you're active in the partnership with the trust. You can also do this at optimal timing. And I have a deal story for this, and we call this the Monday morning quarterback, right? Where a gentleman in 2006, he actually sold a property in Minnesota across the street from the Minnesota Vikings Stadium for about $20 million. And for him, he was looking around and he's going, this 1031 market makes no sense. So he wasn't going to pay for it. He wasn't going to overpay for a property he didn't want to buy. He also didn't want to pay the tax. And so what did he do? Well, he used the deferred sales trust as an alternative for the first time. And this guy hates the stock market. He's like us. He wants to own investment real estate and he wants to do value add stuff. That's how he's made all of his money. He's a billionaire now. So he uses the deferred sales trust for the first time. And guess what happened? 5 years later, the bank calls him up. It's like, hey, you know that property you just sold, or you sold 5 years ago? Yeah, to that 1031 buyer out of California. Yeah, I remember that guy. Yeah, well, we just foreclosed on him. He couldn't service the debt, and we're just curious. Do you want to buy it back? And he goes, and this client, DST client, says, well, yeah. What's the cost of the property? He goes, well, about 40% less than what you purchased it for, or what you sold it for. And he says, that sounds like a great deal. Give me a couple days. And he was able to reallocate, of which his funds were in a conservative portfolio of liquid securities, into an LLC to partner with him to buy this property. And when I heard this story, all tax deferred, by the way, my brain exploded. I'm saying that's the Monday morning quarterback. He played that exactly right. And that's exactly what the deferred sales trust can do. And it's incredible. It also helped move funds outside of taxable estate. You can get diversification. You can get liquidity, debt freedom. But for you, I want you to understand as potentially you're trying to raise funds from other people, is you can raise those funds, you can solve people's problems, and they can invest with you. So my goal for this presentation is just to show you that why the deferred sales trust is the number one growth strategy you need to be focused on in 2022, how to grow your business with the deferred sales trust, even if you don't have any capital gains tax deferral knowledge or a ton of time, how to use the DST to drastically increase your capital raises and conversions immediately. So a little bit of my background, I'm a former multifamily agent at the number one largest national commercial real estate firm specializing in real estate investment services, known as Marcus & Millichap. I'm also a current multifamily broker with eXp Commercial. I've closed about $350 million in commercial real estate and deferred sales trust transactions, and I've done 1031 exchanges, Delaware Statutory Trust, and I've been featured on a bunch of media, including Joe's show and a lot of fancy, smart people, much smarter than me. But one of my most proudest moments was I had a chance to get on with Kevin Harrington from Shark Tank. He came on my show and I came on his show, and I'm coming out with my new book, which is cool, and he'll be a part of that. But it wasn't always that way, everybody. I wasn't the guy just closing deals, cold calling people. And I have 6 minutes to go, maybe even less, and I'm only a third of the way through, so I'm going to have to shorten this presentation. But here's the thing. My first year in the business, this was not me. In fact, I was not closing business. I was one of the guys in the back scratching my head, and I was barely making in the business, and the 2008 crash happened, and I went from making like a little bit to nothing overnight. I knew nothing about capital gains tax deferral, really, other than the 1031 exchange. But I was willing to do whatever it took to keep my dream alive of serving people in the commercial real estate world, of preserving more wealth, and helping clients do the same. And so I worked at Cheesecake Factory. I did whatever it took to make this thing fly. And it wasn't easy, but I learned about the Deferred Sales Trust during this time period when my clients were struggling. And that's where I shifted my whole take on how to help people solve problems. And that's where the Deferred Sales Trust grew and grew and grew. My business grew. And what's possible now is I have my family and I, we keep my wife home full time. That's one of her dreams with our kids. We have 5 kids. We live in Sacramento. But I discovered the hard way, and I want to teach you guys the easy way. So if you've been struggling, this is probably why. We call this the perfect storm. The crypto, stock market, commercial real estate, all-time highs, plus the baby boomers, all of their wealth, and all the political challenges which are going on, which potentially increasing the capital gains tax rate. By the way, it's not your fault. Your CPA doesn't know, or they haven't studied it close enough yet, or they probably thought it was a Delaware statutory trust, which is a common mistake, right? But remember, 1031 doesn't work for Bitcoin, NFTs, crypto owners. It also doesn't work for primary homes or businesses. And the 1031 exchanges are very, very challenging. And so the hard way is raising capital on small amounts. And these small amounts typically are IRAs or private money or after people have paid tax. And there's somewhere between 25,000 to 250 range, right? But there's many of those that I've worked with that had to say goodbye to 1031 investors because they couldn't go into their fund, or buy to investors who were just going to pay the tax. And so that's a big challenge. I don't have time, so I got to keep going. So I'm going to walk you through how to do this here in the next few minutes. But first, a few deal stories, okay? This was the client who did the first $5 million in 1 hour on Saturday. Again, they did a $5 million. They deferred about $1.85 million of tax. The next one, she worked for a big tech company, and she did this deal, and she did $5 million of Bitcoin and deferred about $1.85 million of tax. And then our third one was another $2.5 million of Ethereum. And so this has all happened in the last 120 days. And this is another client we did it for who was not selling crypto, but he was selling real estate. And he sold a $7.6 million property in Georgia, and we saved his failed 1031. What's cool is he was able to put the funds into a couple groups that we work with. And how many of you know Praxis Capital or Ashcroft Capital here? Of course, you know Ashcroft. He put about $3 million or so into those 2 different funds, which is pretty cool. All tax deferred. We saved another place here, which was awesome. This was a $7.9 million deal in Santa Cruz. They put $2 million with Brian Burke and Praxis Capital, and it goes on and on and on. We don't have time because I'm running out of time, and I've got to shorten this presentation. This is why we're doing this practice run for those who are watching this and wondering. By the way, this is a client of mine who may have just joined this presentation, and he sold a business, which is pretty cool. And I think if he's open to it, he'll be sharing here in a minute. But he was able to partner with the trust to build 72 multifamily units. So if you're wondering, hey, does this work for me if I want to own and be active? Yes, you can partner with the trust and you can be active, which is really, really the most amazing part about the DST. And so what's the biggest objection? Well, the biggest objection is this. Hey, Brett, that sounds great. I'd love the opportunity to do this, but I need my trusted advisor to say yes before I move forward. And I just don't understand how my CPA doesn't know about this, right? Like, this is hard for me to understand. So I'm going to tell 2 quick stories to help you gain some confidence and some credibility, even if you have no deferred sales trust knowledge or capital gains tax deferral experience. And here they are. And the first one is a guy named David Young. In fact, you saw David in the very first video. And David, what I love about David, he's very methodical, thoughtful, and he's one of the most respected financial advisors in the history of PIMCO, as well as as worked with a guy who might be one of the most respected in the history of financial advising. There's a guy named Bill Gross. And for those who don't know who Bill Gross is, he's kind of like a Mark Cuban, if you will, of the financial advising world. So very respected, very successful. Well, David was Bill Gross's right-hand guy. And David learned about the Deferred Sales Trust about 3.5 years ago. And like most people, he thought it probably was too good to be true, but he was open enough to take a look at it. And so he did a 2-year due diligence on this with his legal team. And he found out that it was not only legal and it worked and it was fantastic, but he put his name on it and he became a part of the Deferred Sales Trust new asset allocation advisory team. He can support financial advisors, especially for ultra high net worth individuals who are looking for extra support beyond just a traditional financial advisor. So it's an option. So I always say to the skeptics out there and the people that are very cautious about introducing things that maybe haven't been vetted well is if it's good enough for David Young and his legal team, after 2 years of due diligence, right, pouring through this, and he's willing enough to put his name on it, is it good enough for you and your legal team? So that's the first one. And you can talk to David. I'd love for you guys to talk to David. So the next one is not here. So we're going to have to put that into the presentation as well. But that's a guy who he sold his practice, and his wife's a treasury attorney. And they were very skeptical, but they did it for their multi-million-dollar business sale. He's a financial advisor. Both very skeptical. They did due diligence on it, and they did the deal. By the way, if you want to hear David's story, you can go to capitalgainstaxsolutions.com. Oh, this was the story here. This is Cal. Here he is. Too good to be true, to not sure it's legal, to 100% legal. You can hear Cal's story. I'm out of time, and they're going to be kicking me off stage here live. So I'm going to just pause there, and we're going to have to rerun this later. So everybody, that's it. So what did you think so far? Any feedback, by the way? Jake Pierce, I know I'm moving fast. I'm trying to do it quickly, but any feedback there?
So no, I think you're doing fantastic. I think occasionally a pregnant pause so that certain things can really stick in. You do pause on very key points, which is fantastic and wonderful. As far as content, you're getting it all out there. So
yeah, it feels like a fire hose. It's too much. I gotta cut half of it out. Maybe I gotta make it like three to 5 to 7 slides.
So if we get real biblical about it, they say out of the mouth of 2 or 3 witnesses, right? So you're presenting not necessarily, I won't call them testimonials, but you're presenting success stories.
Mm-hmm.
And I think that helps things really sink in for people.
Mm-hmm.
So I would have a hard time saying cut it out or cut people out or cut things out. Mm-hmm. Maybe shorter and more concise, mm-hmm. rather than getting rid of content, because right. The reiteration time and time again of it working for other people is critical for those who are hesitant to believe.
Yep. That's great feedback. All right. So now we're back to the mastermind. Thanks everyone for participating in that.
We had Andrew with a comment.
Oh, yeah. Okay, cool. We got some comments.
Brett,
that's cool.
When you and I spoke and I was telling you about our deal in Atlanta, you basically, at the end, you were like, that was pretty good, but you didn't, you basically saved your best for last. You didn't come out with a great hook, and you were totally right. It changed the way that I told the story to investors. Mm-hmm. I think the same thing is true here. The thing that's amazing about the DST is that you can do it with more assets than a 1031, and you can do it on your own timetable. Mm-hmm. It's almost too good to be true, right? Mm-hmm. But it is true. Mm-hmm. And I think that's what you got to come out and lead with is like, hey, people like the 1031, but the tax tail wags the investment dog. Mm-hmm. What if you could have your cake and eat it too? This solves that problem. Mm-hmm. And you can do it on your crypto. You can do it on your family business. Like, to me, that's powerful. And that's why I've been on this call like 15 weeks in a row. I'm just trying to understand it because it's so amazing, right? But I don't think that was clear in the first 3 minutes when when the audience is most ready to take in your information.
You're absolutely right. I think I should literally just start with that story. And Shay, you're on here, right? Did I see you come in, brother? Maybe not.
What's up, my friend?
There you are. And if you're cool with sharing a little bit, brother, man. So I'm almost thinking, Shay, if you're open to this, I might call an audible here. Yeah. Because you're going to be at best ever. What if I do the intro, and you didn't see the intro video, I do an initial intro, and I literally just bring you up on stage. And I'm like, hey, I'm here to share this story. This is how real this is. Shay is my client and he's my friend now, and this is what he was going through. And I'll do a little bit of the story, and I'll be like, Shay, like what is it? And it's literally like the testimonial right there. And tell us about your vision for building, Graceway, and what you're doing with the apartment complex, and how's that going? And like, because I got 20 minutes, if I try to like fire hose them, they're gonna be like, I'm trying to get through this. And
I think what Andrew said is key. I mean, because I sold a real estate piece, but also sold a business, and I wasn't selling 100%. I had a minority position of 33 in each, but yeah, it was the freedom on that 1031 to not be restricted. And then the second piece for me was bringing my own attorneys and CPAs. So, when I rewatched my interview with you last week, right after it was done, I was kind of trying to think back, was I clear just to people that are interested in Graceway? And forgive me of not knowing kind of the context of what y'all are doing right now outside the mastermind. But as I watched it back, it's like, man, would I still have done this? Right. And so the two main things for me were, I didn't trust anybody until I understood the structure. And then I allowed my own parties to come in. And so I think that's the value I could provide to you, right? Of those two kind of pillars. I think of what people that are in at least my position are going to say, okay, I need to check the boxes, but I'm going to go to sleep if I don't hear it quick. So any way I can serve you on that, man, happy to help.
Yeah, let me think through that as I'm
pods kind of thing.
As I'm going through that. Yeah, something there, but because I have 20 minutes. This, by the way, if anyone's wondering what this framework is, it's based upon expert secrets with Russell Brunson, and he does a thing called a perfect webinar, and it's a way to present things in a way that is supposed to be the perfect way to present. However, you typically need 45 minutes, 30 to 45 minutes to an hour. And so I have 20 minutes. And so I think I just got to go, directly to the deal story, right? And then directly to the crypto deal story, and then what's possible. And then what's cool is we are having a follow-up the next day. Me, Shay, Dan Hanford, Hunter Thompson, and Steven Perzovato. I can't pronounce his last name very well. But we're going to be doing like a fireside chat. It's going to be an hour long. And maybe that's what I say. Hey, guys, I wish I had more time. But I'm not even going to get to any of the how. I'm just going to tell you a couple deal stories and try to inspire you to take some follow-up, which is going to be tomorrow, literally, or come after me afterwards. Join our mastermind, because I got 20 minutes, and there's no way I can teach you this complex tax deferral strategy. So I think that's got to be my intro, right? Like, hey, I don't even want to sell you anything. I just want to give you some deal stories and then tell you if you're interested in learning more, come out. Because otherwise, if I'm up there like going a million miles, and no one's going to digest that. And it's going to be painful. I was feeling pain, like just listening to myself talk about how fast I was going.
Brett, the 4-minute mile story, like why do you think that doing the crypto deal was like so impossible, like initially?
Yeah, because so in my mind, why? Because only thing I've ever heard people do with exiting assets in general is more, I guess it's more of a general term, is either go opportunity zone, which is pretty restrictive unless you have a beautiful deal, but it's the 10-year, the 1031, which doesn't work for it. So I'm trying to get what I'm trying to communicate is just the $3 trillion of crypto, of people's having their wealth, they're millionaires overnight, and then they're zero the next day. They're millionaires overnight, and they're zero the next day. And it's this whole just, it's like, gosh, I don't know how to get out without getting completely wiped out. And so I'm trying to capture the moment that the DST, we broke the 4-minute mile, and that we finally gave them a way to release from that. Like, they don't have to feel trapped from that. Like, they can sell high, they can buy low. Like, it doesn't have to be this way ever again, right? Does that make sense, Pierce? I don't know. Is that connecting there? Or you feel like it's a stretch for the analogy?
No, I don't think it's a stretch for the analogy. I just think that the story takes a long time to kind of tell. And that I just don't know if people are like thinking like, okay, like it's so impossible to defer crypto tax. Like, because with crypto, I mean, there's so many things that potentially, I mean, I don't know, just from like a millennial's perspective, right? Like, I have my crypto, like in my mind, I'm always like, there's a way, I just don't know what it is. Mm-hmm. Like, I will figure it out, you know? And so it's like, with the 4-minute mile, I feel like it's so, like it was such just like a black swan event, right? Like that, like no one thought it was like totally possible at all. Where I just feel like people understand that there's tax deferral ways out there. I mean, you could technically use like a charitable remainder trust if you wanted to, and
That's
do some other things.
So I'll just cut out the story. I think that's a good point. A, it takes too long, and B, it's like, even though to me it's like a 4-minute mile because I've been in it. I'm like, it's like being in the bottle, right? And you're looking out at your own logo. Like to me, it's like wow, but everyone's be like, well, I don't know that. So you're right. I think we just cut that story out because it's too long, and then just say these are literally the deal stories. And here's the guy to help you with the legal part. Here's the guy who's actually live. Shay, would you stand up and like wave and hey, you'll be there tomorrow, right? And just keep it super, super simple. What do you think, Pierce?
I think focusing on the deal stories and cutting out the other stories is probably, especially with 17 minutes.
Right.
Like, and try to really eliminate a lot of the how. Like I would not go into any of the mechanics of the structure or whatever. Right. I think they should come to us afterwards if they're interested. I would do who you are, I would do the why, and I would do the deal stories. And then I would leave some curiosity behind that. Like, well, how does that work? And then that way that gives them a reason to jump in. That gives them a reason to call. Otherwise, cause like Russ says, like, if you give like so much content, like there's nothing left to be desired, almost like they think they get it or all this stuff. So I would leave all the mechanics out of it. You can say the code,
here's the challenge. The title's already been predetermined. They're already marketing it, and it's called how to unlock the power of the deferred sales trust to raise capital from crypto millionaires. So I'm going to say, hey, let you guys know, we're not even going to the how-to. We're going straight to the deal story. We have 17 minutes. And however, the how-to will be tomorrow, and I'll be on a whiteboard, and I will write it all out for you guys. We'll geek out together, okay? But I'm going to tell a couple deal stories, I'll eliminate that. Thank you, Pierce. That's really helpful. Jake, any other thoughts?
So I'm curious here because Gary, you have not been with us here before, have you?
I think once, maybe no.
Yeah. So if you want to unmute yourself, that would be fine.
Gary and I are on a mastermind, by the way. Tony Robbins mastermind with Seth Green. So Gary, good to see you. We were just on an hour ago. Gary is a CPA, but Gary, yeah. Go ahead, Jake.
No, I mean everything that.
Yeah, I mean, I agree with a lot of what Pierce is saying. I think because you do have such a short period of time, I think you're going to confuse the hell out of everybody by trying to get through all of the stories and the how-to. Mm-hmm. And I like the idea of kind of going through the stories. And you have different stories because yes, this is about crypto, but you've also said something about, family business. You've also talked about real estate. So there's other, primary residence. So there's kind of, you've given them a bunch of things that can be put through the sales trust. Mm-hmm. So talk about the stories and then, hey, if you guys want to know more, tomorrow, I got an hour. I'm going to go through the mechanics of it. And then if you want more than that, I got this mastermind. I got this, that you can come learn more about it.
Perfect. Thank you, Gary. That's great feedback. Andrew, any other thoughts there?
No, I think this conversation is really fruitful. I mean, the idea is people, once they are salivating at the concept, they'll give you the time to learn the how. So the mechanics is downstream of being captivated by this new idea that 99% of people aren't aware of. So get them captivated by that. This is possible. And then they'll come back for more on this call or the next day for the 16 minutes, and you can give them mechanics of it.
Yeah, I might have the best ever conference. Just change the thing. I want to put unlock. I'll just take the how-to out. I'll put unlock the power of the deferred sales trust, so they're not expecting the how. Okay, cool. What else? Anything else? Shay, what do you think? Any other thoughts on that?
No, it sounds good.
Okay, cool.
I agree with everybody.
Yeah. So let's talk about a deal story that Jake or a live deal right now that we're working on. Okay, and some things that we're uncovering, which is kind of interesting. We spent about I think 5 hours now with the client and the attorney and our attorneys and it's Jake. Do you want to kind of give the picture for this deal that we're working on? And
absolutely. So we have some people who are doing some rather interesting things, and obviously for confidentiality reasons, we can't divulge everything. However, it's the work of an individual for the past 19, 20 years that it's now coming to the point where it's going to be of immense value to a variety of investors across the world. And the sale of said property will be rather significant. In fact, we're looking at different pieces going out there for, at a minimum discounted price of over $1 million. So very exciting. And, the first few checks that might come in could be rather enormous, in the sense that you have to use a bank escrow and have to go through all the very large requirements for KYC and money transmitter and everything else, so that we can assist them with this large inflow of funds. The individuals involved are very charitably inclined. I would say that, wouldn't you, Brett?
Yeah.
That they have a lot of aspirations towards motivating people as high up as government entities towards world peace and towards doing good things between nation and nation. And they are looking to take their gains and their profits that they'd otherwise have to divvy up in a number of different ways. They would be subject to California state tax, federal tax. They'd be with some of what they want to do and accomplish, they'd be subject to estate tax. Essentially, there's so many different ways that their pie would be chopped up. They'd, under certain scenarios, only be left with around 40% at the end of the day if they were just to incur the transactions through normal business operations and then try to do what they can with what's left. With what we're proposing for them, ideally, net of attorney fees, we are able to snowball their proceeds into additional investments moving forward, and then offset some of the interest income that's derived from the trust with some of their charitable inclinations. At the end of the day, they will be, instead of cutting everything up and then making do with what's left over, they'll have more of a net worth after their investments than the gross proceeds that they're going to receive from their various sales that'll be happening.
Yeah, and so on top of that, they're new to the tax deferral world, right? And they're what they do, they're amazing. And one of their challenges was, hey, haven't heard of it. Is it legal, right? Those kind of things. And then one of their attorneys, he's not a tax attorney, he's not a CPA. He's specialized in different thing, but he's looking out for them. And so they're going through this, and we're saying, like, what you do in the art world is what Todd has created in the tax world. Like, the gentleman who represents him, he's kind of this artist is like the Picasso of today. That's how prolific he is. And he's saying, I'm like, what Todd has created, he's like the Picasso or the Beethoven of what he created. And so bringing in your attorney, who's not even in the tax world or has done anything like this, is kind of like bringing in like an average artist who's going to be talking and helping you with your artwork. Like you would never do that, right? And so, although and by the way, we totally were like, hey, let's bring him in. Let's teach him how to do this. Let's help other clients. Like, it's not like we're just trying to dismiss him, but we're trying to be team players. But just realize that because your professional doesn't know about this, doesn't mean it's not legal. It's not real. It doesn't work. And he got that. He's like, yeah, we want to help, every angle we can. We don't want to mess this up. We're like totally cool with that.
It was almost comical, and Gary might appreciate this in the sense that it took us a long time to get to the point where we could understand that their attorney didn't know the different taxation for various structures, from the C Corp to the S Corp to LLCs to various other things. So anyway, after we got that all figured out and we got everyone on the same page, it became a lot more apparent what we were trying to do from high level strategy.
Yeah. So, so we'll report back to see what happens. I mean, easy come, easy go. This came up 2 weeks ago, and things are moving fast, and they're, it's like rushing towards to potential marriage here. We got a meeting with the banks. We got a meeting with the attorneys and going through the thing. And so that's exciting. And then we'll report back. But what would be cool is once the funds are there, they're like, hey, we need you guys to build and bring the opportunities for us to help build the wealth. Right. I mean, they're all part of what they're planning on doing is for their art projects. It includes real estate, but also they need other ways to build the wealth. And so that's where part of what we're trying to build here in this mastermind, deals like Andrew's deals like Shay's deals, right? Deals that Jake and I can bring, and other folks that are in different geographical locations, different expertise, right? More pro-business states like a Tennessee or a Florida or a Texas, right? Like an Alabama, that these things help create opportunities to diversify the wealth. And so it's not just, hey, we have all the answers and we have all the things. No, we don't. I'm in California. I don't want to buy anything in real estate in California right now, or maybe for a long time. So yeah, that being said, that's that kind of deal story. Any questions from anybody? Rebecca, I'm going to open it up to you. It's been a little while. I hope you're doing well. Good to see you here. I'm liking the blue today.
Thanks, Brett. Yeah, no, things are good. I'm working on a couple of deals right now. Yeah, everything's my market. The luxury Tahoe real estate market is similar to what Pierce is seeing. Definitely lack of supply, lots of buyers still. Things are ever changing, but I love hearing about the deal stories that are besides real estate. So it just opens up so much opportunity. And that to me is a key with the Deferred Sales Trust, that it's,
Yeah. And to that point, like, I love that it's art, and there's a little escrow there, but it's not like the guy's going to buy it all cash. It's not like it's, in fact, I should not say that. I should not take that for granted. Like NFT or crypto is like a push of a button. Like it's literally like just done. Business sales, there's attorneys, there's M&A advisors, there's loans, there's blah, blah, blah. Artwork, I'm hoping that it's also pretty clean on that, and it's just done so we can go impact more people. Jake, do you know what the escrow might look like on an artwork deal? Any idea on that?
So when you ask what it might look like,
of course, what needs to happen in order for it to actually close and be verified?
Yeah, so they do an appraisal, or they do a validation that the art is actually the art from the artist. And so it's almost like I don't want to call it an investigation, but they essentially, there's not even a stamp, but there's like there's a letter of validation that it is the real art and that it is really from this artist. And then I won't say, it's almost like having a fingerprint, but they mark it in such a way that forevermore this can be identified as the original. Does that make sense?
Yeah, it does. That's good. Anyone have any questions on anything at all? Deferred Sales Trust, comments, thoughts?
Is this art? Is this an NFT art deal, or is this like an actual like painting deal?
It's both. So he's selling. He's going to be NFTing it, if you will, if that's a verb.
Tokenizing it,
and then also selling it. Jake, you want to explain that a little bit?
Yeah, and so they're actually trying to coin the phrase NFTize. They're going to NFTize the deal. And they have the originals. They're going to have a limited edition. They actually have 2,000 original paintings over the last 20 years, double-sided. Pretty amazing. And there's a collage that the paintings, when they're displayed together, they create a collage.
Don't give too much away, because we can't give it away yet.
On one
we hope to
side.
have him on the mastermind one day. In fact, he might be going to Cabo with us, Pierce. We've invited he and his wife to get to Cabo. So if you get to Cabo with us, Jake and I will be there. That would be cool. So, but yeah, he's an amazing guy, an amazing story, and it would be an honor to be able to serve him as our client. So, but yes, so they're doing the NFT thing,
that's
art
sweet.
thing, and so that's really exciting. So, other than that, what else do we want to cover today, guys and gals? Anything else on your mind, Rebecca, Gary, Shay?
So Brett, I think a little bit you touched on it very lightly. Part of the reason that these people were engaging with us was what to do with after the sale. So not first and foremost the transaction that would otherwise be immensely taxable to them, but what can they do with their wealth afterwards? And in a way, we were being interviewed and almost interrogated. It's like, scenario this and scenario that, and how can you help us, and who else can you connect us with, and let's build the A team. And so we proved ourselves a little bit just by introducing them to some individuals that could help them with escrow, and to some other attorneys that were more specialized in art. And we're definitely providing them with a pathway forward that can allow them to accomplish their dreams. Because at the end of the day, if we have a transaction that is only $1 million, well, that type of transaction only needs certain individuals at the table. If the transaction is $10 million, $50 million, $100 million, $2 billion, there are different professionals and different services that are needed and required, of which, Brett and I have these contacts, and we've worked with these people before to make sure that an individual, not only for the transaction, but afterwards, the journey after the DST, Brett, that might be your second book. So, the journey after the DST is equally as important as being able to take advantage of the DST.
100% is. And Shay, Shay can speak to that, right? Because Shay, you're like, hey, man, if I can't partner with this thing to go build my next dream, which is building multifamily properties and getting that going, because I'm an entrepreneur, I'm a business professional, I'm not a guy who wants to go to sleep and have a stockbroker just manage my money, financial advisor. So talk about that, Shay.
Yeah, as the last guy was talking, I think I learned the world of the DST best after the transaction. So, and still learning. But, my world right now, the trust is in Graceway Group. It is on a property in Clarksville. It's soon to be a 19 or 20% owner, depending on if, the flexibility with the trust too, is there's different things that Brett and I have worked out from a fee standpoint that, a lot of lenders are going to require personal guarantees above 20%. So a lot of flexibility. But what I'm working on now is I've got a commercial security business. I've got another detention security business that I'm starting. And the trust is there for me from a capital standpoint to come on as an equity partner. So for me, creatively as an entrepreneur, even outside of real estate, like there's a whole world of starting businesses and flexibility to scale those. Like my commercial security business, if I want to sell that, trust comes in 20%. And we're assigning all that over. Not necessarily in that order, but yeah, Brad.
You would sell the personal business, roll it into the trust,
sign it over.
So you have the first promissory note, which is X, and then the other one, which is Y, and then you can take all of that together, and 80% can go into your next business venture, and we call it rinse, wash, repeat, right? And so, yeah, it's totally flexible, and that's part of why we guide them, right? Because Shay's out there doing the deals, building the businesses, all that stuff. Our role is to help guide in the process to make it as tax efficient as possible, as well as work with this. Go ahead, Shay.
Yeah. So to your last point, Brett, so Graceway on this deal that we're doing now, everything's assigned over. Profits are well into the millions on that. Thank the Lord. And we just got to get this final phase home. But strategically for us with the DST, like we can leave all this tax deferred money in our construction company. And the banks that we work with are like, well, those notes through now he and I's trust, maybe we have to leverage some of that. But it's like, man, we are scaling our percentages down on these loans and bringing in investors, and we have a bigger seat at the table, which kind of rises everything up. So I think the other thing too, Brett, that I've been thinking about lately, man, so we got an $8 million piece of land a family's going to bring to us in Middle Tennessee. And we think we can get about 200 units. Part of it, maybe not on this deal, but like down the road where I want to try to position Graceway Group with you is somehow strategically bring the DST into the front of this as well with the landowners, with different groups of investors, right? Where it's like that positioning that tax deferral, so for like the landowners, if we're going to give them a multiple, right? It could be, let's say $3 to $4 million. Well, if you've got multiple families, like that's real taxes of, let's say 300 to 600 per family. I just think that to me, that's compelling. And I hadn't really thought about that until yesterday of not only would it bring you business, right, but it helps my company add more value to the top line for these people that are making key decisions of like, hey, how do we maximize this from a legacy standpoint to leave this family farm and develop this out and stuff like that.
I love that. Yeah, it's the idea of pre and post exit, right? Like I mean, you have your exit of whatever you're exiting for the capital to show up into the Graceway, 200 unit deal, right? Then you have the exit of that. Every time it's like, in crypto world, we call it gas fees, right? It's like, what's it going to take ETH to another coin? It's gas fees, right? And so these are, tax gas fees, and they're 30 to 50% every time, right? And so we might be returning 6 to 10% or 12% or 15 to 18 IRR over 3 to 5 years. That's great. But how do we incorporate 30 to 50% of the gain, right, on top of that? And part of the other equation too is like depreciation. Like, well, we can do cost seg, right? And we can get the depreciation to offset, which is neat. And that adds, usually we say 2% on average straight line for 27 and a half a year for multifamily. But for cost seg, you can accelerate that and you can see those returns, which are nice. But then what do we do on the exits? Now, this is part of why it's important to understand that's a $1 million net proceeds, $1 million gain. So for those that are, we just got to make sure that the amounts that are coming in are large enough to substantiate the cost of the trust and all of that. But as long as that's the case, right, then good. Does that make sense, Jay?
Makes total sense.
Yeah. Cool. Any questions on anyone we just said from anybody? Like, that's probably a lot there, but you guys are all really sharp. So, but no bad questions there. Jake, any thoughts? Pierce, any thoughts? How are we doing on time here? We're at 4 minutes. We got 4 minutes left, right? So maybe this is the good place to wrap it up. By the way, Leah, hello. Jex, hello. Sebastian, hello. Angie, hello. Feel free to chime in and say hello and where you're from. We only have like 2 minutes left, but we so appreciate everyone coming. Fireflies.ai, welcome again. I like seeing that name up every week.
Hello, calling from Sacramento, Leah. Just wanted to just be a part of this again. I love it. I'm always learning something new from it. And I'm not skilled in this. So then hearing you guys talk about the topic again and again, it's helping me concrete the information into my brain. So thanks again.
You're welcome. Thanks for being here. Jex, any thoughts? You unmuted, so I'm giving you a chance. We're good. All right, so we're gonna wrap it up. Jake, if people want to find you, where do they find you?
They can find me at strategictaxsolutions.com as well as 1-800-773-1848.
Pierce, where do they find you?
KingdomLuxuryRealty.com.
Awesome. Andrew, where do they find you?
Drew at nighthawkequity.com.
Yep. Shay, where do they find you?
TheGracewayGroup.com.
Rebecca, where do they find you?
Rebecca at RebeccaMunson.com.
Awesome.
Or RebeccaMunson.com.
Fantastic. Yeah, that's good. And for those who want to find me, go to capitalgainstaxsolutions.com. And we want to encourage you to invite a friend, invite a CPA, invite anyone who wants to learn about this, cryptocurrency owners, real estate owners, business owners. And as always, we believe most high net worth individuals, they struggle with capital gains tax, and the deferred sales trust is a great way to solve that. We want to teach you how to do it. So please come back next week. We so appreciate everybody, and we'll talk to everyone real soon.